Let's talk some Bitcoin. After a big talk yesterday on the utility and energy potential of Bitcoin between Cathie Wood, Elon Musk, and Jack Dorsey, the three musketeers, perhaps. If you're long Bitcoin, they came to the rescue. Phil, what do you think about this bounce we got underway? Mr. Streible, Chief Market Strategist at Blue Line Futures.
They got a lot more work to do ahead of themselves if they want to change the trend. I mean, Bitcoin's been a bearish trend now for quite a while. We're continuing to slide lower. That 29,000, you back that chart out, 29,000 has to hold in order to have any kind of chance of working back. Because if we break that, could be a pretty quick move down to 20,000. So blow out that chart. Looks like a big head and shoulder pattern. Bitcoin's really been out of the news. It's it just hasn't attracted the attention. We don't have everyone racing, trying to desperately get into whatever altcoin they can find anymore.
BTC, so a little skewed shoulder, a little lopsided shoulder here from the other one at the end of last year and beginning of this year in particular. So Phil, 30, here's the thing, we're all watching 30, right? I mean, it seems like even the coiners have accepted that 30 has a high probability of breaking. Now, I hear also, though, a lot of optimism the last couple days. When you become impressed by a bounce, at what point might we escape that head and shoulders potential?
It's got to change the trend. It's got to be over 34,000, and it's got to maintain that as some new floor. We backtested it under a bunch of different environments, and if we go we're at a phase transition right now with the U.S. economy, and what this next phase is, if we go into a deflationary period, that's the worst performing period for Bitcoin. Now, any other type of economic narrative, it's done quite well. And the reflation trade, everyone else is chasing all those other big names, getting into the meme stocks and everything else. So that hasn't done as well, but you need to get into anything other than deflation, and you got to get a close above 34,000 in order to re-spark some interest.
It's interesting in connecting it to some of those macro themes. One of the arguments that I think is pretty strong for why Bitcoin's fallen apart here is that we've gotten a little bit more indication from the central bank that over the last month, a tiny, tiny bit of hawk talk, perhaps one explanation coming into this, as there has been higher odds of hikes in the short term. They may not be soaring, but if the Fed is not going to let it all spiral out of control, that's like the opposite of what the coiners want, right? They think that they are going to let it spiral out of control.
Yeah, the Fed, I think that they're quite trapped. I think that they can talk that they're going to do things, but however, I just don't see them doing it. The market's too sensitive. The labor recovery is going to take a lot longer than what they were expecting. It's going to be 12, 14 more months before they get back to full employment. And that's at that point, at that mandate, that's when they can start modifying things. But if you get this Delta variant, you can already see small caps are diverging from the NASDAQ right now. There's talks about there's lockdown chatter again, mass chatter. These things we thought were behind us, and all of a sudden it's like they resurface again. So, there's no telling what's going to happen, but I can tell you that we're very sensitive to these different changes in the economy.
What looks good to you, Phil? Do you have any interest in a gold or a silver? We've found a little bit of support here.
Gold looks really good. It's been doing a fantastic job at defending 1,800. Every time we drop below 1,800, we've seen this quick snapback. We've been scaling in with some of our clients, around this 1,800 level. We would add some more down at 1,775, but it just doesn't. The setup isn't there for another leg lower in gold, where silver, if we go into that deflation period, you're going to see gold and silver also diverge, and the gold-silver ratio will start climbing back up again. But I do like, both asset classes. You just got to play them a bit differently.
To your point on gold, really spot on the way I've been looking at the chart too, in agreement with you. The risk, I guess, for gold is that this whole bond rally runs out of steam if the deflation and cyclical collapse we've got in the last month and a half is a head fake, right? Yields go higher. It seems like gold's been a lot more attentive to real yields than the dollar even over the last 6 months.
Yeah, if you take the correlation of the dollar gold and the dollar are positively correlated over, I believe, the 30 and the 15-day correlation. You go out any farther than that, they've been inverse correlated. So it's really set up for this deflation trade. Dollar, gold, and treasuries are all setting a small rise right now. And you watch it and see if, the Russell's the canary in the coal mine and things start to unravel here coming into the back half.
Okay. All right, Phil, thanks for the update on the charts. Always useful to get your technical perspective.
See you soon.
You got it. Phil Streible is the Chief Market Strategist at Blue Line Futures with a look at the macro charts.